Let's continue here. A TransUnion survey shows more and more South Africans are being impacted financially by the COVID-19 pandemic. It found many are struggling to pay bills and loans. TransUnion conducted weekly surveys on how much consumers in South Africa have been affected by the lockdown. Let's discuss the findings. We're joined by TransUnion's Head of Emerging Markets, Zachar. Hans, good evening, and thank you so much for your time on News at Prime. Firstly, how bad is the state of affairs? What are the numbers saying to you?
Yeah, good evening, and thanks for having me on the show. So, we recently did a survey. So we do a consumer index, and then we recently did a SMME index, because we really wanted to understand, to what extent small businesses were feeling the strain. And what it showed was that 9 out of 10 businesses indicated that they were struggling. So that's 90%. Only 9% were operating as normal, and only 1% were thriving. So this points to an SME community that's under severe strain. But what we also see is that 96% of them had a massive decrease in revenue. So they've had their sort of income streams cut, and almost half of them don't know how they're going to pay their bills in the coming months.
Are we finding that creditors are responding to the situation differently to what they would ordinarily, especially when it comes then to seeking out their monies that are owed?
Yeah, absolutely. So I think the liquidations and the business rescue applications would have been much worse. But what it showed was that only 30% of businesses out there in the SME community hadn't received any form of support whatsoever. So we've seen the likes of credit payment holidays, we've seen the likes of external funding, and a lot of concessions are being made for these businesses to help them through these trying times. I guess the concern is that from a sentiment perspective, these SMMEs, they've reduced their costs, they've cut staff, they've cut stock, they're not sure how they're going to pay their obligations going forward. And those concessions that are made from creditors and the likes, and the funds that have been available, are drying up at a rapid pace, and they're not entirely sure how they're going to trade themselves out of the situation.
Talk to me about the agility then that we're also seeing coming through from the small business sector, and some of the interventions that they're employing to also try and keep those input costs as low as possible.
Yeah, so as I said, I think, a lot of these businesses are struggling with what to do next. So they've all attacked the cost line, but those who are investing and trying to innovate their way out of it, we see a lot of them focusing on digital and e-commerce, a lot of them investing in just the technologies to work from home. And to a certain extent, they're investing in marketing because, you can no longer rely on the traditional marketing to attract customers to brick and mortar. So perhaps the marketing they're employing is to attract customers to their digital channels. So we're seeing businesses trying to operate on a leaner basis. We see them trying to transact digitally. But I think, there's limited things that they can do remaining. And now it becomes about how we can look at sustainable ways of supporting these businesses going forward.
From this data, are you able to extract exactly which sectors or which businesses are under threat in terms of the kind of services they provide?
Yeah, absolutely. So I think the first point is you may think that it's got something to do with rural and urban. That's not true. We're not seeing that in the data. So I think no matter where these businesses are located geographically, I think everyone's feeling the pain. But then we are seeing certain industries taking more strain than others. So if you look at the construction industry, the retail industry, and then the communication industries are where these businesses are starting to feel the pinch. And to a large extent, when we think about these businesses, there are small businesses, there are owner-operated businesses, and you're starting to see those particular industries, the business is struggling with drop-off in revenue and customers, but the business owners themselves are finding it hard to meet their own obligations in their personal capacity. We've seen the consumers who are essentially the owners of this business, 20% have lost their jobs, 78% have had a drop in income. So it really talks to, small businesses struggling as consumers as well as business operators in the current environment.
Interestingly, when we look at some of the cases that have been in operation for some time, and perhaps the startup businesses, those with a longer track record seem to have a better rate of survival.
Yeah, so I think it's always been true in the small business community that any businesses operating under a year, are the ones that struggle the most. But if we look at it, to a certain extent, that view is no longer valid in that we're seeing businesses across the age cycle struggling. So, when we talk about these businesses and we talk about the businesses that are 10 years and older, they're operating marginally better, but even businesses that have been a while are struggling and are not sure whether they're going to be able to transact further.
All right, let's leave it there for tonight. Zachar is the head of emerging markets at TransUnion.